righty, good morning, ladies and gentlemen. My name is Blake Morrow, and you are listening to the Face Webinar. So if you are like, where's Dale? Well, he's not here. He does have a migraine today. Kind of feel like I have a migraine too. But he's so he pinged us at like 11 o'clock at night, and Dale's kind of an early bird. So when he's sending us messages at 11 o'clock at night, he's got a bad headache. So although he did just tweet, so maybe he is around. Hold on, let me see here. Hold on one second. Huh. Okay. Yeah, so he's not, anyway, he's not here. So what I have to do is I have to get it ready to do the bias chart. I thought he might be around, but he is not just yet. So let's talk about what's happening in the market. So I didn't think the euro was going to break out. I mean, when let's go back to yesterday. This daily candle, let me go back this way, and let's just, this is a little bit of a mess, but I'm going to delete this. Okay. And if you go back to yesterday and you take away yesterday's candle, that was the day before. That was Monday, right? So Monday we had a possible double top reversal, and as I was explaining to you guys yesterday, I was really hoping that we would see a move back below this trend line. We would get another ability to or another opportunity to buy down here at the support around the 117.50 level. Obviously that didn't happen yesterday. And one of the things that I think created the breakout of the euro is the fact that so many people were trying to lean on it on the short side. And you know what? I actually shorted a little bit yesterday because I'm like, well, if it's going to come down, I'll take a little bit of a short as well. So I shorted it at somewhere around here, like 119.62, and it wasn't huge. It was just kind of a well, if it fades back towards 119, I'll try to make a few bucks. Nothing big, but man, when we got towards 119.90, I covered it up, and I'm like, man, this thing looks like it's going to break out, and lo and behold, it did. Now what I did is I turned around and went long the euro yen. So the euro yen, if you guys don't know why I went long, this is pretty, you can kind of see why. We have this, and this I told everybody on the daily roundup, you guys know I don't like to play this big inverted head and shoulder pattern. That's a continuation pattern. I just don't like it. I'll trade a head and shoulder pattern that is a reversal pattern like this, but not when it's a continuation pattern. Like this would be an example of a continuation pattern. But that doesn't stop the fact that everybody else is looking at it. I just don't like to trade them that way. But what I did know is this major multi-year trend line was coming up around the 126 level. And I'm like, man, if this euro is breaking out through 120, this is my, my thought process. If the euro is going to break 120 and it's going to get a sustained break above 120, then that means the euro yen is going to eventually follow suit. So we have this, I think this, an area to play the euro bullishness through the dollar yen, or through the euro yen, excuse me, between 126 and 130, because from here to here, as you can see, is 126 to 130. The 130 level is a 12-year trend line that'll come into play. So there's if the euro is going to trade above 120, then it's probably going to squeeze the euro yen as well. So that's why I went long the euro yen. So I got long the euro yen yesterday at like 125.50 or 25.40 or something. And I had orders to add all night, but it never, backed off. But now we're above that 6-year trend line, as you can see here. So now you got to look at any dip. And I'm just showing you this euro because I want to show you a couple euro pairs before we go in the bias chart. Just because I want to illustrate how, bullish the euro is. Okay. So any dip now to 125 like 40, or excuse me, I'm sorry, 125.70 should offer support now for the euro yen. If we can even get down there. Like I said, the euro's in breakout territory. I just had a bid in the euro at 120.25 when we were trading down at 40, and I'm like, okay, if we can just dip a little further, and then all of a sudden the euro spikes back up. I still think the euro is just really bullish here, but you got to look at the euro against other crosses too, not just the euro yen, as I just showed you. You got the euro sterling that's above 90. So now we're above 90. We're breaking out. Now this is Brexit related. The whole the UK EU negotiators are in a tunnel that's been denied. Both sides laughed it off. The pound came down. This is going to be obviously influenced by, Brexit headlines. So just be careful with it. But it still doesn't, stop the fact that the euro is breaking out above channel resistance. Now take a look at the euro Aussie. The euro Aussie, this is a big channel support. We broke higher. Okay. When we broke 163, it's been off to the races since then, since yesterday. I bought some Euro New Zealand last night. I bought it at 152.50, or I'm sorry, 170.52. I don't know where that number came from. I got long right here on this dip. So it looks, this is just broke. It just broke a minor downtrend line, and I'm going to add if we get back above this 172 level. So again, I think the euro is in bullish territory. So I'm playing it against some of the crosses as well, not just the euro dollar trying to get long there. I think the euro looks great across the board. My biggest issue with the euro is that everybody's a dollar bear, but that doesn't mean, just because people are a dollar bear, that doesn't mean that the euro has to go down. The dollar can recover against other currencies. You could see the dollar, you could see the dollar yen. Just give you an example here. You could see the dollar yen rally to 106, right? You could see the cable pull back to 130, 131. You could see the Aussie pull back to 72 cents, maybe 71 cents. The Kiwi could pull back to 68 cents. The euro could pull back to 120. Do you see what I'm saying? It doesn't have to be a only euro move. If everybody's bearish the dollar, which everybody is, in case you missed the memo, everybody's bearish the dollar. It doesn't mean that the euro dollar needs to go down. The dollar can recover against other currencies. It's not a one shoe fits all. Okay. And yes, and by the way, Charles said EM currencies are starting to soften regarding the dollar. Yeah, and then you could see, the dollar Mexican peso could head back to 2040. I'd been bullish the dollar Mex, and because the euro was breaking out yesterday, I closed it out, which, I closed it out like for a loss yesterday, like right here. Right. I owned it like right here, and I sold it here, or I owned it here. Yeah, I sold it here. Small loss. It was no big deal. But with the euro breaking out, it's hard to play the dollar Mexican peso on the long side. And same with the dollar Canadian. And we're going to go to the bias chart here in just a second. But what I'm trying to explain to you guys is that Britney Spears is 39 years old. Wow. Time flies, doesn't it? Just yesterday, she was singing that "Hit Me Baby One More Time." But didn't that feel like it was only like 3 years ago? Maybe 10. But that's got to be like 20 years ago. Egads. All right, anyway. I just realized it was her birthday. Oh man. Okay. So anyway, dollar Canadian. Excuse me one second. So the dollar Canadian, this one is also recovered. So you can see that the dollar could show some strength against other currencies, but like I said, it doesn't have to be against just the euro, or the euro doesn't have to play ball, because I think that the euro is breaking out against a lot of things. So when you see Richard said it was around 2001. My God, that was 19 years ago. Crazy. When you see the dollar recover and you want to play like the dollar on the long side, I think you have to be very selective on what you do and where you do it. God, look at the euro just ripping higher. Gosh, dang it. Just when you think you're going to get, a piece of it. All right, now we do have ADP numbers coming out today. And by the way, a lot of people that I know are looking for a miss. So we're going to go into that here in just a second. But let's go into some charts. So let's start with the euro. And I just want to get the stuff down on the bias chart really quick. So the euro support now will be at 120. There's no if and or buts about it. You might be able to get a little bit below, or I think it's actually 120.20, but I think you might be able to get down towards 120 and maybe even 10 pips below. I don't know if it's going to make it down there today. Just look at how fast the dips are bought. It's ridiculous. And again, I was trying to buy some euro on a dip, and yeah, it said no, thank you very much. Excuse me, sorry. Excuse me one second. Okay. I'm not used to doing all the talking in the morning. Whew. Okay. So where's resistance? So the next resistance at the 127% extension of this move comes in at 120, 2120. Excuse me again. Okay. It is bullish. And let's take a look at the cable. So the cable found support at 133. You guys remember 133 is big support, right? You guys have known that. I mean, we actually were writing down 132.80, but 133 came into play. I'm going to write down 132.80 again. 134 had rejected us before. We made it as high as 134.40, so we don't care about that right now. So we're back to the 132.80. Oh shoot, ADP 134. Hold on. All right, guys. Let's go to the dollar index. Let me pull up all the news stuff. Here's the data flash. This comes with ForexAnalytix, just so you guys know. We are looking for 410,000. Hold on. Okay, we got 30 seconds. Here's Bloomberg. Okay, so compare 430, that number right there at the very, I'm going to put it right at the very top. Okay, and let's see how fast. This is Bloomberg, by the way. $2,800 a month for this stupid thing. All right, this is as low as $19 a month with ForexAnalytix. 307, same speed. Wow. So that was a miss. The dollar is not being affected much. Okay. The dollar didn't really move a whole lot. Let me move this back. I don't need that now. Delete that. The private data that's going to suggest that we need to pay really close attention to the NFP this week, and if non-farm payrolls miss, that again has to reaffirm that a stimulus package may come by the end of the year, or sooner rather than later. And that's why stocks can still benefit from the stock market will still benefit from weak data at this point. Okay. I think as data progressively weakens going into next year, I think that's going to have a negative effect on equities, but you can see how equities are just, they're responding positively to this right now. Okay, speaking of equities, let's stop here. So the S&P, we hit all-time highs yesterday, briefly. I mean, we're right there. Let's imagine we surge to a new high. The resistance beyond 3677 is 3753. So I'm going to write both of those numbers down for the S&P. 36, actually, I will write down 3680 roughly. And while we're above 3600, you have to stay bullish, right? You just have to. And then next would be, just in case we break out. I don't think we're going to, but just in case, 3750, it's actually 3753, but you guys get the gist of it. All right, let's go over to the Aussie. So the Aussie is still struggling, below the 74.15 level. Is it, hold on really quick. Give me 1 second, please. Just need to get out of that. Okay. And let me cancel that. Sorry, guys. I'm just wrapping up a couple things here. Okay. So the Aussie dollar, I have this like minor trend line here. 74.15 is still key resistance. I think while you're above, you can see all these highs here. See this right through here. And that trend line support right there, that's going to come in at 73.25. So I'm going to write that down as minor support. Okay, and then resistance is 74.25. I can't flip it to bullish yet. I just can't. I mean, I want to, but we can't get over 74 and a quarter. And while we can't get above that, I'm a little nervous. Kiwi, we have this ascending wedge. The scary thing is if you're long, every time you hit a brief new high, it gets slammed down. So this is, you hit a brief new high and you get slammed down. You get a brief new high. That's the German government states planning to extend closures of restaurants, blah, blah, blah. Okay. Every time you get, this is like a characteristic of an ascending wedge. And so if we break through 70 cents, that's going to be a problem. Okay. We have to stay bullish. We have to stay bullish, but the warnings are there. Divergent relative strength is there. So now the high is 70.80. But the risk here is if you're short, the risk is if you're short, the euro rips up past 121. I mean, you have to imagine there are a lot of people that are, now looking at the euro and they look at this, right? You go from, you make a real quick trip here from 115 to 120, right? And that happened quickly. I mean, you're talking within, a week and a half. People are looking at the same thing going, okay, and we've now broken through 120. We're going to see 125 really quickly. So I need to be on board with this move. So if the euro dollar continues to scream past like 121, that's going to drag, the Kiwi higher. No matter, it may be begrudgingly, but it's going to drag it higher. Okay. So that, that's the risk if you're short the Kiwi right now. I think it's having a difficult time, but that doesn't mean it's going to stop. Okay. The dollar Canadian, we hit a brief new low. And this is one of those currency pairs. If you put a gun to my head and you said, hey, Blake, buy the dollar, I'm going to do it against the Canadian. It's just, I'm going to. I'm not, if you put a gun to my head and said, Blake, you have to buy a dollar right now. What are you going to do? I'll buy the dollar Canadian then because it's acting the best. Does that mean that's what I want to do? No, but that's definitely the way I would play it, because I mean, even today we hit a brief new low and then we're back up again. So today's low, let me make an adjustment here. Today's low is 29.16. We'll write that down. And I feel like I need to put it on bearish, but I'm gonna keep it in range because every time we hit a new low, it's, you know, pops right back up again. Resistance today will be, well, let's just call it 130. I mean, you know, if it gets back to 130, you're going to find sellers up there. You're going to, you know, people keep thinking the way that what I'm saying. Hey, if I'm going to play the dollar on the long side, I'm going to buy it against the Canadian. Fine, you're going to do it. Then, you know, as it bounces, it gets to 130 and you realize the euro is still bullish. You're like, I'm just going to sell it here. You know, I'm going to take some quick profits. So, you know what I mean? All right. Dollar Mexican peso. Again, another currency pair that if you're if you're a dollar bull, I mean, this is probably one you want to keep an eye on. I played it, even though I didn't lose a lot. I didn't you know, you're playing the dollar on the long side and you don't lose a lot. I think I lost like 100 pips, which is basically like a 8 pip loss in the euro. I mean, that's all it is. It's, or maybe even like a 5 pip loss when you take a 100 pip loss in the dollar mex. It basically is a flat when you're trying to play at the dollar on the long side. That's good in this environment, right? 2020 is resistance. It continues to hold. I'm going to keep that in range. Dollar Swiss. Now, that's a breakdown. Next support, 89.25. And now any rally back towards 90 cents, you probably need to be a seller. I get a little nervous playing the Swissy to the long side just because shorting Swiss francs, that's a, you know, because this happens. Swiss National Bank likes to shove that, you know, that trade right up your rear end half the time. So I don't like playing the dollar Swiss on the short side, but that doesn't mean it can't go down. Just, you know, if it gets a little carried away, that's when the SNB steps in and, you know, they stick it to you. So just be a little careful. Playing that, I'd actually prefer to just buy it down here or buy it down here, frankly. Not saying I'm going to, I'm just saying that's how I'd prefer to play it. US dollar, Norwegian krona. This is another one that's actually acting not so bad. We're holding this 161% extension, but we still have this double top to play into. So any rally back to 896 is a short, in my opinion, because that's going to be your best risk reward to be on the short side. And then support is whatever these lows are, 877, 878. All right, let's go real quick to the dollar index. Okay, so the dollar index, this was, again, I was really caught off guard yesterday when we broke down. Because the day before was a false breakdown, right? You had this hammer, what did look like a hammer at the end of the day, and then you're like, oh, look, a false breakdown, a hammer. You know, we got to get a rally. You know, this is a good setup for a rally, and then the dollar index just slipped right through that support. So now, while we're below 91.80, you got to stay bearish, and this is the 127% extension comes in at 90.92. $90.92 is 127% extension. Dollar yen. So I'm gonna just give it to you guys again. I have no idea how to trade the dollar yen. I have no idea what to do with it. But what I will point out is we have this upper sloping trend line, or this ascending trend line here that comes in at now at 104. I think we wrote that down yesterday too, but that's all right. And then resistance looks to be pretty key here at the high today, which is 104.75. So that looks to be good resistance. We are in a range. Last but not least, gold. So you guys knew that was coming, right? The high today was 1832. You know, resistance is 1838. If you were just sitting there waiting for it in European trade, you probably would have squeezed one off around the 1830 level and, you know, drop right back down to 1815, 1816. So now I will write 1838, 1840 as resistance. Support intraday. I'm going to keep it on range now. Support intraday, probably back down to 1800. And then you can start looking for something like this. You can go, ooh, look, Blake, a head and shoulder pattern. Right? I mean, I'm just imagining things happening here, but I'm just saying that's a possibility going into tomorrow. So let's delete all this crap. So 1800 will be support. Let's see if that can hold today, if we get a dip down there. All right, so there's your bias chart. I don't know if Steve and Stelios are here, so I'm going to have to take a picture of this. They were in a meeting, so I'm going to take some questions. They should be here shortly. Hold on. Okay. Let me take some questions from you guys this morning. Like I said, I'm flying solo. We don't have Dale here. Hold on. Okay, let's see here. Hugo, good morning. Dale said, hi, Dale. Or no, Kevin said, hi, Dale. No, I'm not Dale. Dale's got a migraine. Michael says, hello. Louis, good morning. Thanks again. Mr. Dale, Forex Gal says, Mr. Dale, feel better. Thanks, Mr. Blake. Gregorio says, Euro is one of the most bullish charts. Textbook, someone would say it's so obvious that it's going north, guys. Yeah, it is. I mean, I can't disagree. And I'm irritated that I just didn't get my long off this morning, you know, on a dip to the 25 level. Dips are going to be shallow, and I think that we, you know, right now you have to basically stay bullish while you're above. Well, 120, I would say 120, but you can really just take this like trend line here and just say, okay, well, you know, I don't want to see it below this trend line, which comes in at maybe 1960, 1970. Oh, hey guys.
Hey, sorry.
Hey, Stel.
Hey, mate, sorry.
I was like, damn, my speaker's not up. Hold on. Let me just address a couple questions. I'm going to pass it over to you. Gregorio Sosa said, on the contrary, everybody in Twitter is long dollar, the DXY. That's why it keeps going down. Market makers are flushing them out. Yeah, I don't follow anybody on Twitter that's long the dollar. I mean, I'm sure there's some, you know, retail that's long dollars that are trying to play counter trend.
Blake, I was checking some broker statistics, like something like 80-something% of the retail crowd, for example, is short the Euro USD.
For like FXCM and IG.
Yeah, like 80-something, almost 85%.
Yeah,
which, you know, is an excellent contrarian indicator most of the time.
It is. And I'll tell you, you know, every I don't. Okay, so every bank, there's not one. So let me just say every bank, because, and even the guy at Bank of America, last week we were chatting with him. He's our contact over at the analysis team for Bank of America. He even said every broker is bullish euros or bearish the dollar into 2021. Every. He's like, let's see how that'll work out, and I agree that it's probably next year is going to be the year the dollar rips people's heads off, but that's next year. And we have to get get between here and the end of the year. So I would venture to guess, if I had to guess, the euro dollar is probably going to make a move to the mid 120s. And then it's, we're probably going to find some resistance up here. And then we're going to, push back towards the teens going into mid next year, and some risk aversion. I'd imagine that's what's going to happen, but that doesn't mean that we can't squeeze to 122, 123, 124 in the meantime. Right. So anyway, but I can imagine the retail crowd right now, Steve, is fading.
Oh yeah. Aggressively
big
short
time.
Euro USD.
Yeah. So how you guys doing?
Good, mate.
Good.
So we don't have Dale today. He's got a migraine, but I did see him tweet. So I maybe he got up. He got up and he realized, oh, I got a headache. Oh, I got to retweet this. Okay, I got to go back to bed. Yeah, that's how I feel about Twitter. I'm just kidding. So
the only little problem with not having Dale on, and since neither of us was on the webinar because we were on another Zoom call about Trader Summit, by the way. So also a little teaser. We're preparing for the next Trader Summit event, which is going to be at the end of January. So guys and girls, keep that in mind. Is that we can't actually read any of the questions that were already sent. So since we can't really hold Blake here to throw questions at us, anybody that asked any questions that you want answered, unfortunately, you're going to have to type them again, so Stelios and I can actually address them.
Oh, I got it, because you guys weren't.
Yes, so we can see questions.
The whole time.
Yeah, that were asked before we logged in. Yes.
Got it. Okay. We got a couple. Did you see the Q&A? A couple questions about the Aussie yen and the Nifty 50 and the US dollar INR. So I'm going to just go over the Aussie yen really quick. And this is one that I was watching this morning because we are getting close to breaking out here. And as you can see, the Aussie yen is probing this multi-year trend line. It's a multi-year, by the way. And we're trying to probe resistance, but I think, you have to be a little careful with it while you're below the 70-10 level, because it was like a little bit of a false breakout. So it looks bullish, but I think it's going to need some help from equities. And I still think equities are bullish. So it should be able to break out. I would just wait for a daily close. You get a daily close above 77, let's say 77.20, 77.15. That's going to be pretty bullish Aussie yen, in my opinion. So anyway, with that being said, Steve, Stelios, before I pass it along, I have to mention that if you guys are not part of the ForexAnalytix community, this is our chat room, just so you can see. This is... I'm just going to give you an example. You can go all the way back. Wait, shoot. Where am I? Oh, this is somewhere around here. This is where I got up this morning. This is everything that's been said. That's in just a couple, 3 hours, 2 hours. So you can see we chat quite a bit in the chat room, and it's very active, and we have a great community of traders. So if you want to be part of this, you have to be part of ForexAnalytix. So try it out. It's only $1 for 10 days. And not only do you get the app and all this other stuff, you get Hey, we got Cyber Monday pricing. When do we do that?
We do.
Monday.
No, I get what? No, how come no one told me? How come I don't know about these things? All right,
It's-
take advantage of Cyber Monday, guys.
It's on a need-to-know basis, and you don't need to know.
All right.
Unless, of
Wow,
course,
you
you're willing to
guys-
subscribe to become a
you
paid
guys-
subscriber, Blake.
Georgie said, and something about Pepperstone. Well, Steve and Stellies can explain that. I'm gonna roll out. I got to get over to the office. So, you guys have a great one. Stella, I took a picture of the bias chart, so I'll upload it.
Oh, thank you very much. Thank you.
All right, guys. Thank you.
Thank you, mate.
Thanks, Blake.
See you later. Bye-bye.
I'll see you guys on the daily roundup, which, by the way, is only for ForexAnalytix subscribers. I'll see you guys there in 4 hours' time.
One of the many benefits.
One of them.
Yes. So,
Having to do with Pepperstone, since Blake mentioned that, another way for you to become a subscriber for free is you open through the ForexAnalytix sponsored page, specifically through this link, a Pepperstone account. You fund it. Doesn't really matter with how much money you fund it.
it has to be the minimum, whatever minimum.
Of course. And you get two months of ForexAnalytix for free. And even if you do 5 lots of trading within these 2 months, which is very easy to do, you get another 2 months of ForexAnalytix. So this is an easy way for you to check out the full services of ForexAnalytix for 4 months. By just becoming a Pepperstone client.
That's worth nearly $500, basically.
Indeed.
Yes. Indeed. Okay, so we don't know what Blake talked about, but we're going to cover a few things. Let's start with the more general things that happened before we go into FX and cross rates and all that. So let's start with the Brexit. There was a little bit of the pound is actually retreating a little bit because A, we're 1 day closer without a deal, and B, Barnier made a statement and he said that he told, I think it was EU ambassadors, that if there's the UK finance bill, which is expected next week, if it has anything that has to do with breaching international law, remember they were talking about this what Boris Johnson was proposing in terms of the Northern Ireland situation, all that. If there's anything that breaches international law, then that's going to be seen as something very negative from the Europeans, and it's going to, it's going to stall things. It's going to do whatever. So basically, there was some negative comments which are putting pressure on the pound, and Euro pound is going towards 91. I still want to sell 92 if we get there.
Speaking of which, another example of how beautifully this channel works, right? Yesterday we were testing the channel resistance once again. Boom! Today we're threatening with actually producing a tweezer top here. So quite an interesting candlestick formation. And if by any means we break through 132.50, I think that's going to be quite a bearish signal that will at least open the door for a retest of the channel's trendline support.
Yes, and we were talking yesterday and this morning, I think, on the chat, but on Twitter as well. I had a conversation with a few friends, and people were saying, what chance do you think the markets give for a no-deal Brexit? And people were saying, 5%. 10%.
Yeah, it seems that most people believe that the market is not really pricing in, not having a deal.
Well, the question is, though, let's go back a few months where we weren't even close to having a deal, and Euro pound was still 91, 92, right? It didn't get any higher. So that for me is one. Obviously, the euro moves quite a bit, and it's strengthened against the dollar. But the Euro pound for me is one of the main things that I look at. To see how much of what's priced into the.
And this failure is going to be one. Yeah, this was one of the things I wanted to talk about yesterday today, because yesterday I mentioned that it was the 3rd consecutive day that the Euro pound was testing this channel's trendline resistance, and guess what? Today we've cleanly broken through it.
Yes, yeah, true. And people say, zero chance 0% chance for no deal. I'm a buyer at 0.
Yeah,
So,
I'm a buyer at 5. I'm a cheap bastard, I know.
Yeah, I agree. I think we will have a deal. I don't care what kind of a deal, but I think it's not 0%. It's not 5. It's not 10%. It's higher for no deal. But if it wasn't, I think cable would be at 140 now. I mean, literally. But anyway, let's see what happens on that front. We still have nothing, and nothing firm anyway. And there are a lot of rumors and a lot of things flying around. I'm not listening to anything until I actually see things being signed or not. What else? We had on the US side, we have we seem to be edging towards an agreement on another stimulus package, which is going to be just under $1 trillion. Yeah, and this is definitely something that's helping markets and risk, because there's always a risk that they're not going to agree. I think that was almost a zero risk, 0% chance actually, or close to event. They're going to agree on something, and yields rose as a result, and the market is relatively buoyant. And
it's clear that the market expects that this is just the appetizer, Stelio, because if the market really believed that it's only going to receive 1 trillion of stimulus, because I remind you that they were very, very close in an agreement at near 2.
yes.
So
Yes.
obviously 1 trillion would be extremely underwhelming for market expectations. So my assumption is, and correctly probably so, that the market will view a 1 trillion as an appetizer, and as a stopgap between now and when Biden takes over, which I'm pretty sure that they're going to pass another relief package.
The real deal is coming. Yeah, this is just, like you said, the appetizer. Yeah. So so that is definitely helping risk and push yields a little bit higher. Then yes, the yields still at very low levels, and Blake has been talking about 1% level in 10-year US, which I think is important. I think in the long run, yields are going a lot higher. I think there has to be some kind of reversal to normality, or however you want to call it. But at the moment, with all this stimulus, all this central bank buying of everything, I really don't see how we can have a sustained move higher yet. And also, let's not forget that in 2018, the drop in equities was initiated or caused mostly by higher yields, and the people will know that, and the Fed will know that, and everybody who is not really supposed to be looking at equities as an indicator of the economy, they know that, and they don't want to have another.
That is why the Fed began hedging that probability, Stelio, and that's why they've been talking about higher inflation. As I've said multiple times, I think that they're talking about higher inflation not because they hope that they can achieve higher inflation. In my opinion, that is the last thing they want to achieve, but they want to make it seem like that's what they want to happen. So when it actually happens, they're not, the market doesn't force their hand into actually shifting monetary policy.
Yes. It's a big comment here. Hold on. But sterling retreating also because a lot of undetected extra unemployed by huge retail department. Yeah, retail department stores going bust in the UK. I have a lot of friends in London and in the UK in general, and they're telling me that employment-wise, things are not looking good, and even housing, rents going. It's a big issue. It's a big problem. So yeah, that could be it too. But whenever I look at equities and risk in general, I just try to go back to see how things were before COVID. And remember, before COVID, things were turning lower. So things were not doing great. And suddenly COVID comes, we have a huge sell-off, or not huge sell-off, 30% sell-off. And now we're back above, and, like nothing happened. Actually, no, it's as if COVID actually fixed everything from before, which is a little bit strange. But
COVID was the perfect excuse to unleash unprecedented amounts of stimulus, which they wouldn't have an easy time explaining why they did it, just because we were turning into a recession again. So COVID was obviously a big disaster for the economy, but was also an amazing excuse for them to do things that they wouldn't be able to do otherwise.
Yeah. And we've said this so many times. I think every asset is probably going higher in the medium term because of inflation, because of this big increase in money supply. I like real assets, and that's what I always tell my friends and people who ask me. I like to have things that have tangible value. Steve, you know this. We actually bought a rare car as a part of our portfolio. So I like to diversify and try to buy things or have things that are indexed. So anyway, that's my view on that. And
I couldn't agree more, as you know.
Yeah, and it's been the case for the last 10, 15 years. Anything you look at, watches or wines or anything, they're all just on an upward sloping trajectory. Yeah, obviously nothing goes in a straight line, so you have to time things, but time it properly. But that's what I think the big picture is. What else? COVID wise, yes, more information about vaccines. Apparently, the UK is starting next week vaccinations, so that's good.
That's going to be interesting.
That's good theoretically. Let's see how that pans out.
Yeah, let's see how it works out in action. Actually, I'm pretty curious.
Yeah, and Samsi says old cars have high cost of ownership. Well, if you pick right, obviously, if you buy 1930s car, it will have a high cost, but there are others which have less so. Unlike precious metals, yeah, I agree. You buy precious metals, you have them in a box somewhere. You only have to worry about security. That's it.
Yeah, but to be honest, even if you want to buy gold, there are companies that actually sell you gold, and I mean very respectable companies that actually can store your gold as well, for some of them for free of charge if you buy the gold from them.
Yeah, I like to have my assets.
Oh, no, I don't disagree with you, but for people that don't want to store it themselves, there are companies. I'm not going to advertise them, but there are companies that are out there like more than 100 years, so very respectable companies that will actually store your gold for free as well. So that's not really an issue.
Yeah, true. The pound seems to be losing more ground. Has there been something? I don't see.
Of course, there's been something. Channel got, channel worked out and got it rejected. There you go.
Yeah, true. Otherwise, the dollar. We've said our view on the dollar here many times. I think it's going lower, but I really do think that in the near term, we're at a very high risk of a spike. I don't know what's going to cause it, but I would be careful if if I was if I was short dollars, I'd definitely be taking some profits here. And if you look at euro dollar, I mean, there's two zones. I look at the weekly chart. There's one which is around 120 to 121, and we're right in there. And there's another at 125-ish. So I think we could get to 125, but I think, if you've been long euro dollars, I think somewhere between here and 125 is really where you should be giving up a lot of it.
125.50, we had, that spike there. Yeah, absolutely. But in any case, from a technical perspective, what we see is that we've broken through this trend line resistance, and in all honesty, I still see nothing wrong with Euro USD. I mean, I still see no sign whatsoever that this market is ready to reverse lower. At some point, yes, it will correct lower. But in my opinion, fighting the trend, and I've been saying that for quite some time, is not the smart thing to do here.
Well, I agree. I never said fight the trend. I think.
I know. I'm speaking in general. So I don't mean that that's what you said.
Yeah, I think if we do get a spike, it has to be sold into. Basically.
Yes, exactly. I think dollar should be sold at any decent rebounds. I think the opportunity is to sell it. I think the dollar is going to be 20-30% lower within the next couple of years. Easily. So do we go there in a straight line? No, we don't go in there in a straight line. But in order for that to happen, we will have periods that dollar is going to be extremely weak, right?
Yeah.
So clearly we've already seen the first period that the dollar was weak. I mean, just keep in mind that Euro USD went from like 105 to 121 almost, and I think it might even rally more. At some point, it's going to have to take a breather. Same thing with the DXY; it's going to rebound, but I think it's going to be sold again for another leg lower that's going to produce a lower low, so on and so forth.
Yeah. And if for people who think that, oh, the dollar's weakened a lot already, it can't go much more, look at like a 10-year chart of DXY. It goes from like 73 to 104. We're very, very close to the highs. Well, not very, very close, but we're much closer to the highs than to the lows. So
yeah, I mean, this doesn't have a big history, but you know, you can get an idea. I mean, we were at 2008 at 70, right? At 70. I do strongly believe that eventually this index is going to produce a lower low, right? It's not going to go in a straight line, but I do think that it's going to produce a lower low eventually. Yes, I do think that we're going to see levels below 70 in the dollar index.
Yeah, I wouldn't bet against that. That's for sure.
Yeah.
Yeah.
Okay, perfect. Thank you, Stelio. I'm going to go through some of the questions and then we call it a day. Gold. Listen, I said yesterday that for me, yesterday's daily close will be important. We had massive up days yesterday in gold and silver. In my opinion, the chances that we've already seen the low have increased substantially. Massive morning star formations, both in gold and silver. You know, in combination with the fundamental backdrop, which, as I have explained, it couldn't have been better for the precious metals. I think it's a very good chance that we did see the low. Is it certain? No, it isn't certain. It's going to be certain once we break through the channels. It's going to be, nothing is ever absolutely certain, but I think it's going to be an extremely high probability scenario once we break through these corrective formations. But I do think that the chances have substantially increased that we've seen the highs, and I think that any pullbacks like the one we're seeing today intraday are probably buying opportunities, both in gold and silver. Now, if you remember, I warned a couple of days in advance that if they start doing okay, platinum is going to be one of the first to explode higher, and it has done so. I think we're going to end up slicing through this previous area of resistance at 1040 easily as well. So, you know, that's what I think about that. Having to do with crude oil, nothing has changed here. Another day of consolidation in what seems to be like a bullish consolidation. If you're asking me, it has, you know, a much higher chance that that's the case. I see the exact same thing here in natural gas, 5th day of a consolidation, but probably a bullish consolidation. I think it's going to be resolved to the upside as well. So nothing has changed in my outlook here either. We had also questions about the DAX. Listen, the DAX looks bullish. I mean, there's no other way I can say this. I mean, we've had this leg higher, which was, you know, very sharp. Momentum was extremely strong. And, you know, momentum has clearly stalled here. But, you know, until proven otherwise, I just think that the DAX is somewhat taking a breather. So, you know, I wouldn't be buying it up here if that's what you're asking me after this move. But on the other hand, would I be selling it? It's not an easy decision to make. I would definitely be buying dips, right? Not an area that you can easily buy because you know the risk reward doesn't make sense. But I think you shouldn't be trying to fade it either because it's dangerous. I mean, it can really jump higher. Anything that is risk correlated looks rather good. I can admit that, for example, the Aussie USD might be trying to form some, you know, head and shoulders formation here on the 4-hour chart. I will admit that the Kiwi, we've showed that before, looks like, you know, might be about to reverse lower. I'm watching this ascending wedge, but you know they were seriously overdone in the short term, and nobody says that, you know, they can't correct lower somewhat. You know, admittedly, the vast majority of risk on assets are somewhat overdone in the short term. So yes, there is no risk reward in buying them. But on the other hand, the medium-term trend seems to be quite clear, and it is to the upside, right? And I think it's very dangerous for you to try to take the other side of the market. A lot of people are trying to do so, and they just keep losing their money. I mean, you just look around during the past several weeks. So many people trying to call a top in equity, so many people trying to call the top in some of the commodity currencies. Many people tried already to call the top in gold and silver, and I think they will have ended up doing that at near the lows actually of the correction. Now, other questions that we had to do with Bitcoin. Listen, Bitcoin is trying to hold near the highs. I see a lot of divergences. I don't think this is the place you should be buying Bitcoin, right? I think that Bitcoin can very easily produce another sharp leg lower to get rid of all the people that jumped long once again, probably prematurely. Undeniably, Bitcoin and Ethereum are bullish, and they're not now bullish. They've been bullish, and we said so since they actually broke through this trendline resistance back there. But is this the place that you should be buying them? I think not. I think not. So if you really want to get some exposure, I think you should be hoping for another leg lower to get better prices, because price doesn't make much sense here. I mean, you can close your eyes and buy, and it might actually work, but this is not the way you should be trading, right? Because closing your eyes, buying and hoping is not a trading strategy. It's a strategy that might make you some money several times, but it's going to lose you a big chunk of your account on a few occasions, and you might not survive that. So that is why we're never advocating tactics like trying to buy an overbought market or sell an oversold market, right? A market being overbought or oversold are nice confirmation signals that the market is either bullish or bearish, true, but that doesn't mean that the timing favors you doing that, buying them when at the exact moment that they're really overbought or at the exact moment that they're really oversold. It's just an indication that when you get a pullback, it's a good idea to join the trend that you didn't previously join, or if you get a rebound, to join the downtrend that you didn't previously join. Copper, yeah, copper seems to finally be taking some kind of a breather today, but so far it's minuscule, right? So far, the only thing we've done is that we've pared back yesterday's gains. That's it. I mean, copper is on a rip, and as I was saying yesterday, at some point it's going to pull back, but from this point on, you should be actually watching this 330 previous area of resistance as a likely area of support. So what I said yesterday still 100% applies today. I don't know if this is going to be the beginning of a pullback, but if it ends up being the beginning of a pullback, watch 330 as support. And keep in mind that the next upside area of resistance is the 127% extension of the COVID move lower, which comes at 3.68, 3.69. Or let's round it up to 370. Okay, that's the next upside target. Ethereum, yeah, Ethereum didn't begin its uptrend, as nicely as and smoothly as Bitcoin did, but it ended up catching up. When we had this first pullback, I said, what's this 490 area of resistance as support? It did work out. We might retest that area, in my opinion. And keep in mind that this 630 area is a strong area of resistance. So as long as we're in between, you can play the range, I guess. Buying 490 probably makes sense. Would I be buying here? As I said before with Bitcoin, the answer is no. But I do think that, Ethereum looks quite bullish as well. Gold up perhaps on the vaccine reflation people expect. BTC likewise. Seems like the USD is in precipice. If buy metals, make sure you get it delivered and you hide it away. Not anyone else. Remember Madoff? Yeah, I agree, Richard. I prefer to have physical gold, physical silver, to having financial instruments that give me ownership to that. So yeah, I'm with you there, mate. Questions about Aussie yen and Euro Aussie. I did mention the Euro Aussie yesterday. No problem. We can revisit again today. Here is Aussie yen. Aussie yen has broken through this channel. I think it, it generally looks good, but you can see that we've gone through a period of consolidation, that there is no clear trend. So would I be selling or buying it here? The answer is no, I would not. I think that the Kiwi yen looks much better, especially after breaking through this massive channels trendline resistance, right? So Kiwi yen between the two of them, I think looks somewhat better, although I wouldn't be buying that either as we speak. Perhaps a retest of 72 is a better buying opportunity if you want my opinion on that. And having to do with Euro Aussie, I showed that at the end of last week, specifically mentioning that Euro Aussie from a technical perspective was at a very good risk reward opportunity in buying it. And why did I say that? Because we had this long-term channel trendline support getting tested again and again, but the bears didn't have the strength to actually breach through it. So from a risk reward perspective, a rebound was looking like a good proposition, and we've done so far quite nicely. Keep in mind, though, that in general, as I said back then, and that hasn't changed, we had a massive move lower, and the move that followed seems corrective to me. Now, within the context of this corrective move, yeah, there is a lot more space that we can take advantage and rebound. I mean, we're currently at, when I said that, we were at below 162, and we're currently above 164. But there is even more upside. I mean, we can rally all the way to 168.50, and if a little bit more time passes, since this channel is a little bit ascending to 169, and we're going to still be within the context of this move. So there is more room to rebound without even invalidating the the concept that this is a long-term correction for the sharp move lower. So if you're asking my opinion, medium to long term, I think that the Euro Aussie is going to move a lot lower. If you're asking my opinion for the short to medium term, I think that the Euro Aussie has more space to rebound. And I don't think this is the time you should be selling it if you're looking for a short-term trade. Okay. One more question, and I think we can call it a day. And it has to do with the pound card, which I haven't had. We have a question about NVIDIA as well. We can easily have a look at that. So pound card, haven't had a look at that for quite some time. Here it is. Look at this. Nice symmetrical triangle. So, what do you want me to say? Nothing to do here. You see this symmetrical triangle. I think at some point pound card should move substantially. But I think that's going to happen only once we break through this triangle, right? And we're currently headed back in the middle of it. That's what I think about it. And let's also address our friend's question about NVIDIA. We look at this beautiful formation. Two interpretations. A, this is a topping formation. If you want my prognosis about the possibility of that being the case, I think rather low. Scenario B, and by far the likeliest, in my opinion, this is a bullish consolidation that's going to break in the direction of the trend. So there you have it. I think this is most likely a bullish consolidation that will eventually break in the direction of the trend and, rally further. Okay.
That's great,
okay.
Steve. I think we can wrap it up. That was very good.
Thanks, Phil. Okay. Thank you, everybody else. And
remember, don't just count your pips.
Yes,
count
true. Count your blessings, as Dale would said. Hopefully he's going to be well tomorrow to have him with us. So see you all tomorrow. Bye-bye.
Thank you, Steve. Bye.